Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, and we are now at the 22nd of August 2018, just about 4:07 p.m. Central Daylight Time. In the grain markets, down across the board. Now, one of the events that happened today is stories are starting to be carried about what the president and the government is thinking of giving the American farmers as they've lost the export business of their soybeans to China. And the talk is, and in my update tonight for my people, I've already given them the link to the story, that the government is considering $1.65 a bushel. So we had an internal argument at work. What is that going to mean for the farmer? If you take that and you add $1.65 to this, you get $10.35, right, in a price of beans. Now, that does not take into account the basis level in different areas. Some people are 50 under, 70 under, but it's still a nice amount of money. Then the question came up, and this is what I brought up, why wait for the carry? You got about 40 cents in the carry. I said, don't do that. Sell your beans right now. Go out there, get that all done, do as best as you can on your pricing, take the $1.65 and call it a year. You got a big winner. So I think that's going to weigh from my perspective, if that's in fact what the government does. They're also talking about a penny a bushel for the corn. In the stock market, a slight down day today in the Dow and the S&P, and by many measures today marks the longest bull record ever in U.S. stock markets. Gold up a little bit today, dollar down a fraction. As we come to the soybean market, what we've had is a market that went back up on a closing basis, took out previous resistance. It has settled back into a tight range right now, with the market down 23 cents for the week. If this market gets back and takes out on a close, the 846 level on a close-only chart, this market turns bearish again. So that's what I'll be watching. When you come into this chart, if you took out the 850 level, you have a problem, but it's actually a higher number. Because on this chart, you'd say, I don't want to take out that most recent low, but really, the key number is right here. And that's where the swing line low comes in at 866. So now, 4 cents from here roughly, if the market takes that out, you end up destroying the bull pattern of higher highs and higher lows. When you look at where moving averages are on the chart, the 100-day average is way up here, so I'll call that out of play for the moment. The market number that is in play is the 18-day in the red right there, and Bollinger Bands. Now, the upper Bollinger Band, with all this bull action we've had recently, hasn't hit itself back up there since July. And here we are at the latter part of August. Will we hit the lower band again? My guess is, and it's no more than a guess, that if you take out the 866 level, watch out. You probably do go for that number. In terms of momentum, momentum's down. So now we have a market with two of the three elements in trouble here. First off, you have the swing line pointing higher. That is countered because prices are trading under the 18-day average of closes, and then the momentum is pointing down. I'll call it no trend. In the meal market, I think the pros were covering shorts today, and you'll say why. And my argument is that each time you hit the lower Bollinger Band, on a sideways pattern in this market, the key is sideways, the market has tried to hold it. Now, eventually it's going to give it up like it did back here when it was sideways, and then it starts pushing through. Can that happen again? You bet your bottom dollar it can happen again, but we are oversold. You hit that number, and I think the smart money play was people are taking some money off the table. Maybe not all of it, but some. Soybean oil had a big reversal and a bad sign today. Let me explain this. Yesterday you had an outside day up. When you have an outside day up, one of my charting theories is that low of that outside day up should not be taken out in the next two trading sessions. If it is, it often, not the word always, but often puts into play price and either a moving average if it's under it, which it's not in this case, or the lower Bollinger Band going into play as an objective. And let me come back to this. That's what happened. You took it out today. So I think the 28.24 number is back in play in this market. In the corn market, like in the meal market, you're back down to the lower Bollinger Band. Now, if the market's going to run with this, it's got to keep pushing the momentum down and get beyond the lower Bollinger Band, which I don't think is a high probability play. I am not friendly to the market. I just think the pros are waiting for a better entry spot on the short side. In the wheat market, you finally fell down today to challenge the 100-day average of closes in green and the lower Bollinger Band, which yesterday was 522. Today it's 521.25. Notice that you got down to 520.5. And again, if one were short, that combination being oversold would have lent, I think, some to step out of the marketplace. In the sugar, interesting. You closed in the top part of the day. You had a reversal from the lows. You've hit the Bollinger Band and bouncing away. Should this market be able to take out 1022 and lose the embedded reading by getting the red line back over 20, what happens then is this then becomes a springboard possibility to get back to the 1051 level. There's nothing bullish on the chart, but if you lose the embedded reading, there's all kinds of reasons to be out of shorts. In the coffee market, you're not even getting a bounce. This is what you've heard me term here as riding the lower Bollinger Band. You get to one side of it, the other, and you don't even get away from it. And it's often accompanied by just this reading, an embedded bearish reading. Therefore, I'm waiting to see if the market can get a rally under its belt. And the question, I think, is where the shorts step in. In the cocoa market, up and over the top Bollinger Band in an overbought condition. Is this enough to take this sideways action that was developing and create something more of it? Don't know. The odds of staying over the black dashed line are only 5% of the time. Therefore, as I look at it, the market's ahead of itself, overbought, in an uptrend, hit price objectives. In the cotton market, you have no trends. You have a pattern of a lower low and a higher high, an oversold market that tried to reach up for resistance at the 100-day average of closes and miserably got there and just ran out of momentum. In the cattle market, we have a cattle on feed report this week. Be careful. You stepped out of your uptrend. You yesterday fell back to support at that 18-day average of closes. Today, that gave way, and by the end of the day, you broke through this 108.77.5 zone with a low today. Actually, I'm wrong on that. Yeah, no, I'm right. You got to 108.30. And that broke this market to a lower low, higher high pattern, very much sideways action. Something big is going to happen in cattle because of all this sideways action. Markets don't say that sideways very long. Feeder cattle came back down to support right through here at the Bollinger Band and the 100-day average, looking for the support at that level. And hogs, momentum down. Market failed at the upper Bollinger Band. You'd expect that, pulling back towards this 18-day average of closes right now. You know, we talk a lot of grain at our firm. And if you're a grain trader, you might want to see what our chart of the day price counts are, because as they set up, it gives you a pretty good idea as to what hedgers are doing, what the speculators are doing, and where the market might be headed. To get on our list, just simply give us a call. Go to our website at www.iraepstein.com, or you can click up here if you're watching me on YouTube. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow, same time.